Yeah, good evening, everyone. So this section is about the study with me section, and it's just going to be brief notes. This is not just it is not a beginner's class, or but you can every beginner is our it's very simple to a term that everyone can understand. So I would just want you to pay attention. I'll be doing recap on what using what I used to trade. I will do a recap on how we have taken entries on gold this week. So let's start by this. First, how I trade. I basically use the key level model, key levels and liquidity. I see most of the people have hear about key levels, and some people ask me how do I use my entry, and pretty much is more easier for me because I just have to simplify it to a simple term. So let us see. First, to just make a disclaimer, it's not, please, you're writing on my screen, please. To just make a disclaimer, it's not just, it's something you have to study and just have to pay attention to the chart. So key level are decision points that we make decision maybe to earn buy or sell. So you have to really understand the logical points of key levels. Please, can you mute yourself? All right, thank you. So what are key levels? What are key levels? So mic is still on. Who is this person? I'll meet you. Okay. So what are key levels? Let us have. So let's say. So what are key levels? We have what are key levels? Sorry, key levels. So what are key levels? Key levels are decision points or some mic is on. That is this. How simple is instruction? Okay, what are key levels? Sorry for that. What are key levels? Key levels are decision points or closing price where you take your specific decision on how price is going to buy from or sell from. So there are points whereby you buy to sell or sell from. So there are decision points whereby you have to make decision on how to pick your POI, maybe to get a buy pull trend or a sell trend from there. So we have basically three types of key level. The types of key level we have the A shape, we have the V shape. The A shape is what we call the resistance, and where is this? Sorry. So we have the A shape key level. We have the A shape key level, also called the resistance key level, and we have the V shape. The V shape is called the support key level. So these two key levels are these these two key levels are are the key levels that basically are being shown on the line chart. But there's other one key level that is not always shown on the line chart, and which is the open close level. The open close level is just two consecutive candles. Then we have what a bearish. We have two bearish candles, the open and the closure of the two candles, and we have same thing with the bullish candles. So these two key levels are to be used for the sell key levels are supposed to be used for sell, while the buy key levels, the bullish key levels is supposed to be used for buy. So now, how do we interpret this on the chart? A quick one. How do we interpret this on the chart? From the chart, we can basically we use more of the line chart. So how do we interpret it on the chart? So going to the line chart, you can see that for us to basically get our key levels on the line chart, because from the candles, we can see that we have the closure. basically we can pick our key levels from the closure, but for more clarification, you can just go to your line chart. You see you have the A-shape key level, the closure of the bearish candlestick. For the V-shape, you have the closure of the bullish candle. So for the V-shape, you have the closure of the bearish candle. For the A-shape, you have the closure of the bullish candle. And the open close level is something we have like this. This is open close level. This is a bearish open close level, and this is a bullish open close level. Okay, this is a bullish close level, open close level, a bullish open close level. This is where price rejected from today. But in having understand that we have three kind of level, so how do we use it on the daily basis? So now I'm going to give an explanation on how we can catch both trend on the market using these key levels. The idea is you have to understand what the key levels are to be used for. For the A-shaped key levels, we are going to, price is supposed to use it for sales opportunity until proven otherwise. What do I mean? So it means that whenever you have a sell key level, a A-shaped key level, price is supposed to use for a sell until proven otherwise. It means that at this point, at this entry point, price is going to use here for a sell until what? Price prove otherwise by breaking it with an impulsive move. Then price can use it for what? A buy. The same thing with what? It's to a V-shaped key level. If we invert this key, we have what? A V-shaped key level. Price is supposed to use for a buy. Then proving otherwise, price broke with impulsive move. Then price can use it for a sell. So having understand this, we now dive more into how we can use it on the charts. So now, for Monday, we can see just a recap of what happened during the week. So let's see. For Monday, remember I told you from a recap we have to do V-shaped key level is where we buy from. The A-shaped key level is where we what? Sell from until proven otherwise. Then the bullish open close level is where we buy from. And the bearish open close level is where we sell from until proven otherwise, which means until price take it with an impulsive move, the price is going to use it for the opposite direction. So now, having that understanding, let's just go to the chart. Now we can see for Monday, let's say this is where Monday started, clearly, where the Monday starts. Okay, this is where Monday started. So in having, this is 1 hour time frame, just using your structure on your 1 hour time frame, you can really see what price is doing. Now let's see. This is what you come to the chart around, let's say after a short session, you come to the chart around 8 o'clock, then you're waiting for price to give you a period to buy or sell from. But what are you waiting for? You're waiting for a key level to be validated. Just understanding that kind of concept gives you an edge to the market. So now let's see. We have a clue that what this is a A-shaped key level. Remember, a resistance key level that's supposed to use for a sell, right? Price reacted to it. Then what do you see? Price broke it with a what? A body. So what the price did? Price came back to what? Use that key level for what? A buy opportunity. So on Monday, for the buys, this is what we have. This is what we have taken for the buys. The first buys on Monday on gold. This is what will have happened. Just using the formation on key levels being validated. So on Monday, we have a key level that we're expecting price to respect to sell from. So now price tested that key level, but what happened? Price would validate the key level, and what do we have? We have price coming back to use the key level and buy from. Now going back to Tuesday, just using that same ideology of key levels to take every trade. You have to understand that every A-shaped key level is going to use for a sell, and every V-shaped key level is going to use for a buy until people otherwise. So using that structure on a 1 hour time frame can give you entry model on each day. So now this was done on Monday. Now on Tuesday, we can see that, what can we see? We can see price was after price got to this extent, there was not entry at this point. But what do you see here? You see that we had what? We had price break this key level what with impulsive move to the downside. You can see, giving us a clue that okay, now we have a change of direction at this moment. So what do we see? We see price come back to what? Use this open close level that was tested before and cause a break of structure. This open close level was tested, supposed to use for a buy. It was a bullish open close level, price supposed to use for a buy. But what the price, validated it and also break structure with it. So what do you see? Price came back and used that same key level for the sell at this point. Price used that same key level for the sell at this point. And this will be your entry, stop loss above this high. That will give you 1 to ratio 3, 1 to 3 hour. This was done on Tuesday stroke Wednesday Asian session. Now going to Wednesday, we can see that after price took out this what? After price indicated this key level on this what? Open close key level, price what? Swept this high as liquidity. This is not a subject of liquidity, but I'm mentioning the chart. You can just have a clue of liquidity. Price take out this liquidity as internal liquidity, and price broke structure to the downside, making sure that this key level that was tested, you see, this was a V-shaped key level. Let me show you on the line chart. That was a V-shaped key level that price tested and what got validated. You see, price tested that level, price got and validated to the downside. What do you see price do? Price came back to that point, and that's why we have the drop for the sell again. We have the sell from that formation on Wednesday. This will be your entry and your stop loss above the what? The high and target you want to 3 or your nearest key level for reaction. This will be our nearest key level for reaction. This happened on Wednesday. Now going to what? Thursday. The same thing every day. Now we have price playing around Asia session there, but what do we see on Asia session? Did the same on 1 hour time frame. I'm not going to any other time frame, just 1 hour. You can see what price broke to the downside with full momentum of body. So we have a break of structure to the downside here. We also have price also break this low with body. So what the price do? Price retraced, and what do we have? We have this price came back to use this key level and this point, and we had a sell onto this point. Let's see. Stop loss above this high, and what we had the push of this sell to this downside. This will be a level of reaction. 1 to 3, you're also out. And also to what happened today, we can see what happened today on the chart using the same method. You see that price was buying, but you can't really see what was going on around this point. But what can you see? You can see that after price took out all this high as liquidity, you can see this was, what do you see? You see price came back to this place. But what can you see? Do you see a level here? Let's go to the line chart. You can see something. You can see that we have what a A-shaped key level that was validated twice to the upside and to the downside. What can you see? That was the point where price came back and where we are having the present sell at the moment. After the news happened. This happened after today's news. You can see. And we can target this low. We're expecting this low to go at the moment. You see, just understanding the key levels formation and the breakout of what price is doing at a particular time, then you see that we are getting almost entry at the same time frame. I'm not going to lower time frame. I didn't start my bias from 4 hours. Just following what the price is doing on the 1 hour time frame, I can form my bias. Just understand the key levels formation and what is going to be used for. Remember, I told you A-shaped key level is used for what? A sell formation until proven otherwise. A V-shaped key level is supposed to use for buy until proven otherwise. In having that understanding, you have to bring that logical thinking onto the chart. So now, when you see that a shaped key level that was supposed to be used for what? A sell formation, price tested it, and now got violated, even giving you a sign of breaking structure, you have to be patient that the price is going to come back and what? Use that same level for the buy formation to go, the buy trend. Same year too, after price took out all this point and you see price came with impulsive move to the downside, broke this open close level with that's supposed to use for a buy scenario. Price violated it with impulse force and what break structure to the downside. You can see. But what the price came back to that same level and we had a set. Just having the logical understanding on how using key level on a time frame, just 1 hour, cashing your entry on a daily basis. So the idea of how I use, there are many ways I use key levels, but this is just a simple formation on how you can use a level on a daily basis. Just following what price is doing and the recent structure that got violated, you can possibly just cash your entry from that formation. Just understanding a level that got tested and got violated, price will always come back to use that entry. Even if price is violated so many times, price can also come back to that level and also use it. So you have to understand that a key level formation is either used for when you decide where price is going to buy from or to sell from. So that's also a crucial point that's been made, to buy from or to sell from. So the key levels is a point whereby you make specific decisions. So you have to just look at the chart and say, oh, where do I think price is reacting to and where price is going? So now I'm paying attention to a level that price is going to use for a sell formation, but now price has violated it. I have to be patient to wait that this level is going to use for a buy scenario. And now I see that, oh, price is going to use this level for a sell scenario, but price violated it, or price is going to use for a buy scenario and violated it. It's going to use for a sell scenario. There's no two ways about it. So understanding the aspect of key levels, the formation, because let me give you a diagram. Let me just give you a diagram what I mean. Because there are hidden things about this thing when we talk about liquidity, time and price. There are still more things about key level, but in all simple form, using this formation to cash, you can use this formation to cash a trade on a daily basis. Just understanding what price is doing at that particular time and what price is going to do when you have an impulsive move of breakout. So the breakout system give you an idea of what price is going to do. So let's say now I told you, let's say we have a bullish open close level. You have a bullish open close level, and you see, and okay, this is a bearish, and you see price was supposed to use here what as what a sell opportunity, right? But what the price do? Price violated it to the upside with a body. So and now price came back to what use it for what a buy scenario. Please, can you mute yourself? So you understanding this part, as in working with key levels, we have to understand that we really work with the body of the candle. We don't work with the wicks, because the wick just give us a reaction of what price is going to do. So the body of the candle give us more intent of what price is going to do. So you see price closing, even though no matter how the candle close, even though it's little with a little body, price still respect the fact. Look at this point here. This might say some might say that this is not an impossible move, but looking at this point, price tested this point and closed with a body, even though it was little. What the price respected the fact to use it for a buy scenario. The same thing here. This was a level that was tested, and price violated with a full force of momentum, respecting the fact that this was where price was supposed to use, because this was the one that transferred the movement and also broke structure. This was a level. You can see on the line chart, that was a support level too. Price forcefully broke to the downside. But what sponsored it was this open close level that got tested and price pushed. So now price came back to respect that formation on that open close level that's supposed to use for a buy, and price we test the level and we have a push to the downside. So So that is how you can really, that's how I caught almost all the trade for this week. Yeah, although the other things I use on key levels, we have liquidity concept and everything, but the simplest way to understand key levels is to understand that what price is about to make a decision. I told you we have to use a A-shaped key level to sell, a V-shaped key level to buy until proven otherwise. So if price prove otherwise by breaking that level with a body, just be patient. Price is going to use that level again. If not at the moment, price is going to use it in the future. So you have to pay attention to what price is doing, even with the structure of the market. You can see, even though at this point, this is a ranging market, because at this point, this is a ranging market, because we have type of market structure. We have the bullish market, we have the bearish market, we have the ranging market. These are ranging market because look at this point, we have equal highs moving together. These are ranging market. Price is just clearing out liquidities from your up, liquidity from your down. So, but at this point, you are seeing your formation of your entry and your exit at this point. 1 to 3, 1 to 4, you are out on a daily basis. Even in a ranging market, price has faced to break this high with a positive move. Price has faced to break this low with a positive move. Price is also ranging. But even in the ranging market, you are seeing your entry process, and you are getting your entry, and we are. So now this is on gold. Let's go to NASDAQ. Let's go to NASDAQ. Let me just give an example on NASDAQ. Then you see that it all appears to all pairs. So let's see. Just understand the work, the key levels and the recent breaker that occur at that particular time. So let's see. Using, sorry, this was when I was back testing. So now let me take all this out. The same thing that occurs. Now we have what, this was Monday. Let's see what happened on Monday. This was Monday. You see, after Asia did his stuff with liquidity, who is this? Sorry. After Asia did we have what? We had a breakout to the downside. And what sponsored the breakout? This level. Even though this level that's supposed to use for a buy, price broke with a force and also broke short to the downside, closing with a body. What the price came back to that point, and we had this set for Monday. Now for Tuesday, let's see. On Tuesday, we can see the recent breakout on this point was to the downside, but you see there was no confirmation at this point, but there was a confirmation for the buys. You can see the buys, we had what, a A-shaped key level at this point. You see, we had what, a A-shaped key level, a resistance level. Like I said, price was tested the level, broke with a body, closed with a body. The next candle was closed with a body. No matter how small the candle is, what did the price do next? Price what? Came back and what? And buy from there. Buy from that same point. Buy from that same point. And we had a push to the upside before we had a retracement. This was Tuesday. Wednesday, we had the same thing. Wednesday, what can we see? After price took out the mitigation of this level, on this A-shaped key level, what do we see? We had what? We had a break. Let me show you on the line chart. We had a break. We had a break. This, you see, after we had a break of this low. But what sponsored the break? You can see we had a break of this low. What sponsored the break? You see, when price tested this point, what sponsored it was this open close level. After this candle sponsored the break. So what the price did? Price came back having that open close level. You can use the A shape, the V shape, but see the open close level that sponsored it, price used it, and we add a set to the downside from here. We had a set to the downside. The stop loss above this high, we had a set. And your next point of liquidity should be POI should be around your next POI. Price came back before you have the rejection. The same thing that happened on Thursday. After the breakout of this point, you see price what? And let me show you something here. After the breakout that occurred here, price break here with a body. This level, price didn't come back to this point. But you can see clearly, let me show you something again. Immediately price broke here with a body, price failed to come back to the entry. So this will be a first miss entry. But if you are patient enough, you can see that same level that sponsored the moment to the left of this sales, price, immediately price broke with a body and tested this point. That will have been a missed trade also. That will be a missed trade, but you see price came back to that point and what? We sold from there again. That way we had the sell. Price used it as liquidity and what? We had a sell from that same key level that was used the previous day for the sell formation. Price came back after the breakout and what? We had the same push to the downside. We had the push to the downside. We had the same push to the downside. We had the same push to the downside. That was the sell for yesterday. And for the buy for today, or let's say the set that happened today, you can see afterwards, price what break with a level, close out with liquidity, and what break what a level with a body. No matter how the body is, price broke the body. What the price do? Price came back. Even if after price took out liquidity, price came back, and we have the formation of this sales into the same level. Price, you had a sell from this same level. But at this point, first you have been stopped out because your entry will be here, and the same formation price still respected the front of the price respected the bias of the market. You have a sell formation to that same side. So it's something that works on just the same time frame. I'm telling you, I'm showing this about. So understanding your key levels formation and how market structure is going to move and what is used for, the types of key level you use for, with the concept of breakout. The recent breakout that happened at that particular time where price has cleared liquidity or whatever it's going to do, price is going to come back to that point and to your key level that have been tested for some time, price is going to use it at key level and sell buy from. So that is all I just want to share about the study with me session, because there's more to share. We have liquidity concept, we had old highs, old lows, we have a lot of things to talk about in key levels. But in bringing everything into the same platform, I'm telling you that key levels are just used for this short point and where price is at to buy or sell. So if you understand that aspect of what a A-shaped key level, V-shaped key level, or open close level is used for, you can form your buyers using the formation just one time frame, and just the 1 hour time frame. You can look for your entry model from that time frame, and you can sell or buy. And there's an aspect of buyers from the daily, from weekly, but I'm not showing you that at this moment because that's a lot of work to tell you. You have to form your buyers from the weekly, from the daily before you get out to 1 hour. But I'm showing you that even from the 1 hour, you can just form your buyers using what the recent breakout from a key level, and you sell or buy. Take your target of 1 to ratio 3, 1 to 4, you are done. Just like that. So that is all I have to share. I hope you guys understand. You guys learn something from today's class. It's just a clear study, with me section of with me. So there are a lot of more to talk about, but I just want to just chip in this today that no matter the structure, the directional bias, they are very, very important, but not to just confuse yourself. You can use the recent breakout on a particular time frame to know what price is in and take your next entry and your exit, because key levels are basically used for decision point and you can also use for exit points. So price on that same time frame. So your 1 hour entry point, you look for your next 1 hour key levels as exit points. So you are looking for your entry and your exit, then you are out of the market after taking your entry and your exit, and price gets your exit, your TP, you are out of the market. Not looking for, you're not looking like I have a saying, even though you cannot catch the trend, you can catch a candle. That 1 to 3 is just a candle in the 4 hours time frame. It's just catching 1 hour, one candles on the 4 hours, giving you 1 to 3, 1 to 4. So if you can catch the full trend, you can also catch a candle that's just flowing on the 4 hours using the structure of the breakout and your key levels just like that. So I'm sure you really, really I'm sure we understand what I'm saying. Or any question before we end the session? Is there any question? Any question, please? Anyone with a question?
No, question, but it's very, very, very nice. I say the entries are very, very mad.
Thank you, David. Any other thing? These are just a simpler way because when we talk about liquidity and everything, there are still more things in trading. There are more things in trading, but making trading simple is just trading is not just it just what trading is just more psychological aspect of it. The more we have to be disciplined and patient. So if we can understand your edge where and simplify it to a simple form, why not? Just make it very simple and just there for you to understand, not just be complex. So personally, me, I wait for just a breakout to occur on that time frame, and when I see it, I just wait for the entry to come in. If the breakout sponsor a break of structure, I wait for that same point. So, but if the breakout just close with a body on a particular level, I wait for a retest. But if you break a structure, I wait for that same point that break a structure to price come and retest that point. So you just understanding the logic behind it. So any other question?
Sorry.
Yeah.
Yes. Joe, I beg. This you said that is when the move sponsor the breakout. That's when you take your entry. There's
Yeah.
this zone you took your entry from in this Nasdaq. The second entry, this one here. Can I draw your screen?
Yes, yes, you can draw. Yeah.
This one here, this entry there.
Yes,
So
yes,
how do
yeah.
you explain? Because that zone did not sponsor the break.
Yes. So let's
You understand what I'm saying?
let me explain why price is that. You can take out the markup. You see that after the breakout on this low, you see this candle gave us a breakout price. This was after the breakout of this point. You can see. Let me zoom out so you can see. After the breakout, you can see that this was the level I expected price to come in. But what do you see? Price didn't come in. So that price didn't come in. So you don't have to just panic. Just wait for price to do this thing. So now price gave us another impulsive move to the downside, giving us a clue of that means there was this impulsive move. It means that price has validated a level that you can't see. But if you go to the left side, you can see. So this level that we use for the sell the current day, that was this open close level. Supposed to use for a sell. We can see price is for a sell, and what price validated it to the upside. Price tested it again, used for a buy. Now price validated it. You see it. So that's where price came back to as the push to the downside. That's what price came to use. So the logical term, so you're looking for the key level price. So what I'm just saying that now you're just paying attention to what key levels, what price is doing. So even though we had a breakout here, price didn't come back to yet. We wait for what? Another breakout. So this breakout occurred again. But this key level, this key level was validated. So that's why price now, and what give more confidence that we have liquidity. The topic of liquidity, internal liquidity, price uses candlestick as what? As an internal liquidity, and price came back to that same key level, and we had the full momentum to the downside. You see how the sell came to that from last formation. It came with full force. So even if this level here that got validated can be used in the future, this something price is going to react to this point at the future. In the future, price is going to maybe next week or next 2 weeks or next price is going to react there in the future, maybe next month. We can't really tell. But following what price is in at that point, we had the first breakout, price didn't come back, second price breakout occurred. But as it occurred, price disrespected a level. And what level was that? Was this open close level that got tested to the downside? It was used for a sell and now got validated to the upside, used for a buy. You see, price used for a buy to the upside. And now you have go validated to the downside again. So a level can be validated more than 3 times or more than so many times, and it can still be used for that same trend if you understand the logic behind it. Even though level is validated more than 3 times or 4 times, price can still use that level again if you understand the structure of that market, what price is in at that moment. Because from this structure here, that can see to break out, I feel that for me, I just know that price is already on a downtrend. For you to have these two candles like this form, it means that we're already bearish. So the entry point, some people waiting for this entry point at this point, it will be a missed entry. But price, the price will give you liquidity as confirmation, and what this key level was used for a buy and a sell, and price got value.